Communication services is the year's star performer, but can it keep leading in 2026? This is Sectors Up Close, and we're talking communication services. The sector is on top of the S&P 500 leaderboard for 2025, up 33% year-to-date as excitement over AI has driven the shares of the biggest names here, Alphabet and Meta, ever higher. Alphabet is closing in on a $4 trillion valuation after the news last week that Meta's in talks to spend billions of dollars on Alphabet's chips. Matt Miskin is co-chief investment strategist at Manulife John Hancock Investments. Matt, I was going to start by asking you how communication services has outpaced technology, but as Google is now making chips, the line between what's a communications company and what's a tech company has got a bit blurred in the AI age, hasn't it?
That's exactly right, Elena. We have seen a real competition here within the AI space, fighting for the best growth prospects across the whole ecosystem. And communication services has really gained some market share here across the supply chain. And as you referenced, Google had already been in the leadership role of kind of the software side, of the search side of AI with Gemini, but also now expanding into other places is making it a very competitive company. So you're already looking at 20 to 30% earnings growth for that kind of business. We're seeing relatively cheap valuations on relative to the earnings growth, at least. And the space continues to find new winners, and communication services is really coming out on top.
Concretely then, how the leaders here, Alphabet and Meta, plan to show they are making money from AI?
Well, that's the thing. A lot of them are already making good amount of money. So they've already got this nice earning stream from their traditional businesses. And then what they're doing on top of that is really fighting it out for that next generation or next evolution here of the technology space. And Google really is fighting it out and becoming a leader there. Meta is struggling a bit. They did have a tough quarter because of a earnings write down due to a tax write-off that they had to have. But nonetheless, it's not as easy as you might think. It's not just you got to buy technology to play artificial intelligence. Communication services has some of the biggest players. And in our view, they could be actually of the biggest winners within the space.
Well, further down this sector, we have the media companies and film studios. And in this space, a massive sale is, of course, underway, that of Warner Brothers Discovery to either Netflix, Comcast or Paramount Skydance. What will who wins that bidding war tell us about the future of media?
Yeah, Elena, it is a space that has been ripe for M&A for a long time. And there's the unlocking of value when you see these M&A deals. So when there's these acquisitions, they're often above the current price that the stock represents. And what we're seeing is basically there's innovation in the media space. They're taking it to the next level with streaming and other services. And they're becoming more efficient as they move on to other companies and find ways to cut costs. So this M&A activity is almost a kicker to beyond the AI space within this sector, communication services. So we've had a cheaper place in that market on the tail of the space, basically the smaller companies within communication services, but then they're unlocking this value. That's a nice additional tailwind to the sector.
This hasn't been a great year, though, for some of the companies who primarily make movies and TV. It's been weak for Comcast, not great for Disney, much better, of course, for Netflix. Will there only be one winner or a couple of winners in the streaming wars, do you think?
Yeah, it's hard to make the streaming space profitable. A lot of companies have gone into it to try to catch market share, but haven't really found a profitable way to do it. Within communication services, those that are very asset light, like some of the bigger streaming names, have been able to do it in a profitable way, have been able to find really nice free cash flow. And in our view, we really still see this space as a asset light, high return on equity part of the market. Communication services overall has seen an accelerating return on equity, which is helped by better profit margins. You've got great balance sheets. And so that is something, in addition, again, to the space that helps the overall sector do better. We think there could be a couple winners, but in particular, those that are very asset light, that are the traditional names, we think will do pretty well.
Do you still see value anywhere in this sector? Any lower valuations you think could make a comeback?
It is a hard market to find value anywhere right now around the globe. Every stock or most global stock markets are up pretty meaningfully this year. What we're trying to do is find growth at a reasonable price. Communication services still offers basically inline PE ratio with the overall market. Relative to tech, it actually trades at a discount. So you're getting communication services with this AI theme with some additional catalysts, whether it's M&A in media or entertainment, and you're getting it basically at a cheaper valuation than tech. To us, that's a nice combo to have, and we think that's actually a place to find some really compelling opportunities.
That was Matt Miskin of Manulife John Hancock Investments. Don't forget you can watch more videos on Reuters.com.